Assalamu alaikum class. In this lecture, we will learn how to analyze different sections or different parts of stockholder equity. So let's begin with problem number 11.5a from Financial and Managerial Accounting by Williams Haka Bettner, or you can say Meigs and Meigs Accounting. So here we have problem in which you can see a stockholder equity section is already prepared, and you can see what we have right now. We have a cumulative preferred stock which is 7.5%, means dividend are given or announced at 7 point half means 7.5% rate, and the total amount of cumulative preferred stock is uh, 2.4 million. Then we have common stock, par value is $2 and total 9,000 shares authorized. So this 900,000 shares are authorized shares, and total amount of shares issued is 900,000. Now you can see that the numbers of shares that are outstanding is not given here. And then additional paid in capital is there, which is the premium or additional paid in amount. Then retained earning is given and total stockholder equity is given. The total authorized number of shares, whether it is a preferred stock or a common stock, is given, but the total issued capital or issued number of shares are not given. So in the first requirement is about how many number of shares preferred stock have been issued. So preferred shares are required. In number one requirement, we will have to calculate number of preferred stock issued. So we can see that $2.4 million are the total paid in capital, and generally shares are issued at par value. Preferred shares are issued at par value, so par value you can see $100, because this additional paid in capital represents only for common stock. This is not for preferred stock, so this means that there's no um, additional paid in capital related to preferred stock. So preferred stock are issued for par value. So now in order to calculate the number of preferred share, total amount of preferred share is 2.4 million, which is going to be divided by par value. So here you can see that 24,000 is the total number of shares issued. So preferred shares issued is 24,000. Uh, Here, so this is requirement number one, which is 24,000 number of shares. In requirement B, they have asked to calculate the total amount of annual dividends paid to the preferred stockholders. So this is the 7.5%. We can calculate in both ways, that is from the number of shares or from the total amount of shares. So here it is requirement B, dividends paid to preferred stockholders. uh, in You can see that total amount of preferred shares or preferred stock is 24 thousands, or you can see 2.4 million. So on this amount, 7.5% 5% dividend is cumulative. So here you can see that $180,000 amount is the amount of dividend. So this is the one way of calculation, or you can calculate it in this way, like you have total number of shares, which we have calculated in requirement number 4, which is 24,000. Multiply by one share is $100. Multiply by rate of dividend is 7.5%. So here we have the same answer. You can calculate it in both ways. So this is the answer in part C. Part C is related about how many number of shares of common stock outstanding. Now, common stock is required. So total amount of common stock is $900,000 and par value is $2. So we can calculate it in this way that total amount is $900,000 and one share par value is $2. So here $450,000, 450,000 number of common shares are issued. So can write it shares of common stock issued, or you can say this is the outstanding number of common shares or common stock. So this is the next requirement number 3. What would be the next requirement? Let's see. What was the average issuance price per share of common stock? Issuance of price means, or you can say the market price, or the price at which the common stock were issued. So this is requirement number D. Um, we have two type of common stock values. One is the common stock par value and the additional paid in capital. So the total common stock par value and additional paid in capital. So the total value of common stock is 900 plus 900,000 plus the additional, which is $8.325 million. So the total amount is, you can say, this one. So issuance price of common stock can be calculated in this way that 9.225 million divide by total number of common shares issued. You can see 450,000. So divide by this 450,000. So 20.5 dollar 20.5. Here it is in terms of dollars. So dollars 20.5 per share is the issuance price, or is the price at which the common share were issued, and this 20.5 includes the par value as well as the premium amount or additional paid in capital. So the next requirement is requirement number E. What is the amount of legal capital? Legal capital basically represents the par value represent the legal capital or legal value. So in requirement E, we have legal capital. So par value of common stock as well as par value of preferred stock represent legal value. So legal capital. So par value of preferred stock is given, which is 2.4 million. And here you can see both values legal. So 24 plus 900,000. So you can see this is the dollar amount. And when we add, then this 3.3 million is your legal capital. So par value, whether common stock or preferred stock. So by adding par value of these two stock, we get legal capital. So this was the requirement E. The next is requirement. What is the amount of what is the total amount of paid in capital? So we have prepared in previous lectures, prepared stockholder equity in which we calculated total paid in capital. So total paid in capital represent um, three things. That is uh, par value of cumulative preferred, par value of common, and any additional paid in capital. So by adding these three, we get total paid in amount, total paid in capital. So we have preferred stock, we have common stock, then we have additional paid in capital. So here you can take amount from this. From this you can see 2.4 million. So we have 2.4 million. Then 900,000 is common stock. So 900,000. Then additional paid in capital is 8.325. So 8325. So by adding all these three, we get additional paid in capital, dollar amount. So this 11.625 represent 625 million represent your total paid in capital. The next requirement, G requirement, is about the book value per share of the common stockholder, and there are no dividends in arrears. So in lecture 1 and 2 we calculated the book value per share. So now in lecture 1, 2, or 3, we are going to repeat that exercise or that procedure, book value per share. So this is the amount of equity that is exclusively available for common stockholder. So the total equity you can see 14.220 million. So we can start from this. Um, Total stockholders equity is, which is mentioned here, for you can see 14.22 million. So 14.22 million. And from this we will deduct, first of all, we will deduct the par value of preferred stock. So less par value of preferred stock, which is, you can see, par value 2.4 million or 2,400,000. So we will deduct this amount, $2,400,000. So this is the amount which is exclusively related with the equity stockholder, or you can say common stockholders equity. So book value per share So this is the amount which is 11,820,000 and divided by total number of common stock which are $450,000. So here you can see $450,000 where it is 450 we have calculated this one in part C, total number of common stock issued. So we have divided it by total number of common stock issued, which is you can see $450,000, and this 11,820,000 represent the stockholder equity exclusively available for common stockholder. So this is the book value per share. Here it is the answer. You can see this is, and this amount is per share, $26.26 per share. And in the last requirement, requirement H, what they have asked, assume that retained earning at the beginning of the year amounted to 717 thousand 500, and the that net income. Okay, net income is also given, and the opening balance of retained earning is given. What was the dividend declared during the year on each share of common stock. So what we are going to start from retained earning beginning balance, retained earning opening balance, which is given. So we have all amounts in dollars. So this is given, which is 717,500, and then we add net income, which is given. We add net income, and net income is also given 3.970 million. So 3,970,000 dollars. So we add both. So this is the amount which is available. Now, first of all, we have retained earnings at the end of the year, and we can see that it is mentioned here, this one. So the difference between these two is basically the total amount of dividend paid during the year, and this total amount represent the dividend on preferred stock as well as common stock. But here in the requirement, only common stock dividend is required. So we will deduct the closing balance of retained earning from here, which is 2.595 million. So we will deduct closing retained earnings. So closing retained earning is 2595. So 2595 triple zero. So this is the total amount of dividends, total dividends paid. Now, this amount basically is the combination of two type of dividends, common dividend and preferred. So we will deduct all preferred dividends. So preferred dividend, we have already calculated preferred dividend in part B. So $180,000 is the dividends paid to the preferred stockholders. So we will deduct is $180,000 from here. So this amount, this 1250. So this amount is the dividends paid to common stockholders. So here, this is the total amount of dividend paid to the common stockholder. We can also calculate dividends per share. So we can calculate dividends per share to common stockholders. And here we have total dividend, which is 500 divide by total number of shares. We have discussed the total number of shares is 450,000. So this is dollar 4, or you can say that 4.25 per share. So dividend is issued at the rate of 4.25 per share to the common equity, or to the common stockholder, or the total amount of dividend issued to the common stockholder is $1.9125 million paid to the common stockholder. So that's it. This is the complete analysis of the stockholder equity section. From this section, we computed so many different amount, or so many variation in the amount, which is related to the dividend, or number of preferred or common stock, or so on and so forth. So that's it from this lecture. Take care, class.